Assalamualaikum and good evening. We are from Group 6 and we will be presenting a financial analysis of Kronologi Asia Berhad. The purpose of this presentation is to explain the company's background and to analyze its financial performance based on financial ratio. First, we will briefly introduce Kronologi Asia Berhad. Kronologi Asia Berhad or Krono is a technology company listed on the S market of Bursa Malaysia and was established in 2002. The company focuses on enterprise data management by providing solutions that help organizations manage, protect, and optimize their digital information. Initially, Krono specialized in physical storage equipment, but over time it has evolved into a comprehensive data management solution provider offering services such as data protection, backup, disaster recovery, cloud and subscription-based solution. With operations across the Asia-Pacific region, including Malaysia, Singapore, and China, the company serves various sectors such as corporate, government, banking, telecommunication, and education. Through continuous innovation, technology partnership, and investment in advanced solutions like AI-based platform and cloud technologies, Krono continues to strengthen its position as a leading enterprise data management provider in the Asia-Pacific region. This section presents the financial ratio analysis, which includes profitability, liquidity, asset efficiency, and leverage ratio. Profitability ratio is a set of financial ratio used to evaluate a business' ability to generate profit relative to sales, assets, or capital employed. It shows whether a company is managing its operation efficiently and is able to provide a good return to its owner or investors. Liquidity ratio are used to measure a company's ability to pay its short-term liabilities using its current assets. In other words, liquidity ratios show the extent to which a company has cash or liquid assets to cover debts that are due in less than a year. Liquidity ratio include current ratio, quick ratio, and cash ratio. Asset efficiency ratios refer to a company's ability to use its asset effectively to generate income or profit. In other words, it measures the extent to which the assets owned by the company are used optimally to produce revenue or returns. The last one is leverage ratio, assess a company's financial risk related to the level of debt used to finance its assets and operations. These ratios indicate the extent to which a company relies on liabilities compared to equity, as well as its ability to pay long-term liabilities and loan interest on time, helping to assess the company's financial stability and operational risk. This table shows the profitability performance of Kronologi Asia Berhad over 5 years using several key ratios. First, the gross profit margin (GPM) shows a clear improvement. It increased from 51% in 2020 to about 21.25% in 2023 and 2024. This indicates that the company became more efficient in controlling its cost of goods sold and generating higher profits from sales. Next, the operating profit margin peaked in 2021 at 10.57%, showing strong operating efficiency that year. However, it declined significantly to 4.04% in 2023 and 2024, suggesting rising operating expenses or weaker cost control at the operating level. The net profit margins follows a similar pattern. It improved sharply from 0.25% in 2020 to 10.08% in 2021, then dropped to 2.41% in 2023 and 2024. This indicates that although sales remain strong, overall profitability after expenses and taxes has weakened in recent years. Looking at returns, return on assets ROA declined steadily from 4.16% in 2020 to 1.33% in 2023 and 2024, showing that the company is generating less profit from its asset base. Finally, return on equity ROE improved in 2021 to 6.03% but fell to 1.14% by 2023 and 2024, meaning shareholders are receiving lower returns on their investment. In conclusion, while Kronologi Asia Berhad has improved its gross profit margin, declining operating efficiency and returns indicate weaker overall profitable performance in recent years.
My name is Muhammad Danish Rizlan Benito with the matrix number BB251600996. So I will present about the liquidity ratio analysis on the companies was chosen by our group, which is Kronologi Asia Berhad. The liquidity trend analysis for Kronologi Asia Berhad over the 5-year period from 2020 to 2024 shows an increasingly positive development in the company's ability to meet short-term financial obligation. For the first, there has been a consistent increase in the current ratio, indicating improved liquidity and the company's ability to cover short-term liabilities. The significant rise from 1.22 times in the 2021 to 1.68 times in 2024 reflect a stronger financial position in this company. Besides that, the acid test ratio also shown an increase from 1.43 times in 2020 to 1.80 times in 2024, indicating that the company is increasingly able to cover its liabilities without relying on inventory. This improvement reflects better financial health in meeting immediate cash needs. Interim average accounts receivable provide an insight into the average receivable that the company needs to collect. The decline in 2021 indicates a decrease in receivable management efficiency, but stabilized in 2023 and 2024. On receivable turnover showed an increase in 2021 but declined in 2022 at 1.39 times, indicating a possible delay in collecting receivable. However, it's recovered in 2023 and 2024 to 3.39 times, reflecting an improvement in collection efficiency. Nextly, for the average collection period was indicates the average time taken to collect receivables. The decrease in 2021 shows an improvement in collection efficiency, but it's returned to a higher level in following years. Lastly, on inventory turnover was indicate the speed at which inventory is convert into sales. The decline from 12.17 times in 2020 to 8.45 times in 2023 shows that the company has become slower in selling its inventory, which may impact cash flow.
My name is Muhammad Firdaus with number matrix BB25161054. So for my topic is about leverage ratio. Leverage ratio have a 3 point. The first is debt ratio. In 2020, the debt ratio was 39.04% and increased slightly to 39.97% in 2021. However, it declined to 28.66 in 2022 before rising again to 30.07% in 2024. As you can see, the lower debit ratio in 2022 indicate that the company was more successfully in managing its debt and improving its finance. However, the increase in 2023 show a slight rise in the financial burden that the company needs to bear. So, the second point is debt to equity. The debt to equity ratio show a significant decline from 64.05% in 2020 to 58 40.65% in 2021 and continue to decrease to 40.16% in 2022 before slightly increase to 43% in 2024. So, the effect of the debt to equity is the decreasing debt to equity ratio show that the company in increasingly relying on equity rather than the debt to finance its operation, indicating better risk management. However, the slightly increase in 2023 needs to be noted as an increase in financial risk. So the third point is about the times interest earned. There was a significant increase from 11.50 times in 2020 to 21.47 times in 2021. However, it declined to 16.25 times in 2022 and experienced a further sharp to drop to 4.6 times in 2023 with a negative value of negative 2.51 times projected for 2020 2024. So for the explanation is the decrease T, especially with the negative value in 2024, signal that the company may face a difficult in paying its interest expenses, which could affect financial stability and long-term viability. So that's all for my part. Thank you.
Assalamualaikum and hi. My name is Nur Elisha Natasha binti Razan. Today, I will briefly explain the asset turnover analysis of Kronologi Asia Berhad from 2020 to 2024, focusing on total asset turnover and fixed asset turnover. First, for total asset turnover in 2020, the total asset turnover was 0.25, indicating that the company did not fully utilize its asset. In 2021, the ratio declined significantly to 0.14 due to slower sales growth compared to the increase in total asset. In 2022, total asset turnover slightly improved to 0.15, but it still reflected inefficiencies in operations. In 2023 and 2024, the ratio dropped and remained at 0.11, showing that asset growth was not supported by higher sales. This decline mainly occurred because total assets increased significantly, especially due to new investment and execution in 2021. While revenue growth remained low, as a result, asset utilization efficiency decreased. Next, for fixed asset turnover in 2020, fixed asset turnover was 2.58, indicating very efficient use of fixed asset. However, it declined to 1.24 in 2021. In 2022, fixed asset turnover slightly improved to 1.26, but in 2023, it dropped sharply to 0.56 and remained unchanged in 2024. This shows a serious deterioration in fixed asset utilization and no significant improvement in asset usage. In conclusion, both ratio indicate that Kronologi Asia Berhad is facing challenges in utilizing its asset efficiently. The company should focus on increasing sales through better marketing strategy, reducing non-productive assets, and ensuring optimal use of existing machinery and equipment. That's all. Thank you.
In conclusion, based on the analysis of Kronologi Asia Berhad financial ratio for the period 2020 to 2024, the company is in a moderately stable financial positions but faces challenges in the operational efficiencies and long-term profitability. Although the margin remains stable and show improvement, the operating and net profit margin declined after 2021 due to rising operating costs, resulting in lower return on asset and equity. From a liquidity perspective, the company maintained a strong position with a current and asset test ratio above 1.0. However, long receivable collection period and declining inventory turnover indicate weakness in working capital management. In addition, the continuous decline in total and fixed asset turnover suggests that asset investment have not yet generated proportional return, while the sharp decrease in the time interest earned ratio signals increased financial risk. Overall, the company is not in a critical financial condition, but require strategic improvement to achieve more sustainable and competitive financial performance in the future. That's all.
For the last slide is recommendation for Kronologi Asia Berhad for future improvement. So for the first recommendation, companies are advised to improve operational efficiency by controlling operating costs more effectively, taking steps such as re-evaluating administrative expenses, optimizing the use of fixed asset, and more strategic depreciation management can help increase operating profit margin and net profit margin. For the second recommendation is companies should improve the efficiency of asset utilization, such as assets that are less productive or useful should be identified and considered for sale, lease or restructuring. In addition, existing assets shall be used to the maximum extent possible to increase sales without requiring large new asset investment. This allows for an increase in total asset turnover and fixed asset turnover. For the third recommendation, companies are advised to tighten customer credit policy to speed up the collection of account receivable because shorter collection periods will increase cash flow and reduce liquidity risks. At the same time, inventory management need to be improved to avoid excess stock and high inventory holding costs. For the fourth recommendation, companies need to manage their debt structure more carefully. Although the debt ratio is at the moderate level, the decline in time interest earned indicates that need to reduce reliance on long-term debt, financing or renegotiate interest costs to reduce financial stress. For the last recommendation is companies are encouraged to focus on revenue growth strategies, particularly through subscription-based service, cloud solution, and long-term data technologies that offer recurring revenue stream. These strategies can not only increase profit, but also strengthen the company's financial position in the long term. That's all from our group. Thank you.